Welcome back. Let's get you all the business news now. And markets started the May series on a high note. Fag and buying drove markets higher. Sensex gained 463 points higher, ending above 61,000 mark. Nifty was back at 18,000 after surging nearly 150 points. My colleague Neeraj Shah with a wrap of all the market action.
Well, thanks for that. We've developed a bit of a pattern this week in that the last 1 hour of trade, we've showing a bit of a rally. Some days it's cooling off, some days it's sustaining. So for example, both on Thursday and today, Friday, the late hour rally seems to be sustaining, and which is a great part from a market, from a bull's perspective. It's a bit of a disbelief because I've been believing that there is a correction round the corner. That is not coming. So great news to the bulls. Today, it was led by the moves in Larsen & Toubro, for example. There was State Bank of India, which did well. Reliance did well. So some heavyweights participated and negated the kind of hammering that Axis Bank took because of possible selling by a private equity fund next week, or for that matter, the kind of downticks that we saw in select IT names like HCL Technologies as well. So that was the nature of the move today. 2 days in a trot, I presume we'll have some fairly good buying. Yesterday, the FIs bought about 1,600 odd crores. Today, for the first day of a new series, the volumes are much higher, which is also a bit of a positive. So the usual suspects, Axis and HCL Tech didn't do well. Wipro, because of the bonus, did well. Larsen & Toubro, SBI, Reliance were the key poster boys on the gainer side. At the broader end of the spectrum, we really had some gainers. So PI Industries had multiple brokerage upgrades today. That stock ended close to 10% higher. Tire stocks in a frenzy ahead of the results next week. CEAT up about 9%. Zomato has very quietly moved from nearly 51, 52 rupees sometime 2 weeks ago to 65. It's been a one-way move of sorts for Zomato as well. And then there were some other moves like Indus Towers, for example, because they're pushing Vodafone to give them the dues, etc. There were losers, of course. Raymond and Godrej Consumer engaged in the deal, which the street has not liked. Both the stocks corrected in trade. There's some pull back into stocks like Mahindra CIE after a stupendous gain, but nothing to worry about there. Net, it's turned out to be a week which has been in favor of the bulls. Can it last ahead of the FOMC meet and ahead of the Karnataka elections coming up in the next 12 days? That is the key question for a market which is looking slightly overbought. I think we'll get the answers in a truncated week, which is coming up next. Back to you.
All right, thanks for that. Now, shares of Wipro jumped the most in 5 months after it announced an offer to buy back about 4.91% of its stock from shareholders at 445 rupees per share. The 12,000 crore rupee buyback is the biggest so far by the company. With the buyback, analysts see a near-term support for stock price. My colleague Tushar Deep Singh joins in with the details.
Wipro announced its biggest ever share buyback on the day its earnings disappointed. The company's board has approved a proposal to buy back 26.97 crore shares, which is equal to 4.9% shareholding at rupees 445 per share. That's a 19% premium. The total buyback will be around rupees 12,000 crore. Naturally, the stock soared today. Intraday, Wipro shares rose as much as 3.63%, the highest in 5 months. Yesterday, before the earnings were announced, they fell 0.04%. Wipro's revenue fell and profitability eroded in the March quarter, but the management drew confidence from its order book, which was the highest ever for a fiscal. Still, growth is unlikely to return in a hurry because as there is a delay in conversion of deal wins into revenue, and Wipro knows that. The company has guided for 1 to 3% decline in revenue in the April-June quarter. Back to you.
Now, textile and real estate player Raymond will demerge its lifestyle business to Raymond Consumer Care. The company will create a listed entity with pure play, a B2C focused lifestyle business. The move will help Raymond become net debt free. We spoke to Chairman and MD of Raymond, Gautam Singhania. Listen in.
Basically, firstly, we announced the sale of our consumer care business to Godrej for 2,825 crores. With that cash, we will then do the demerger of the lifestyle business from Raymond Limited into Raymond Consumer Care business. Obviously, both once we do this and once this transaction is complete, the group will be net debt zero with cash surplus. So this is, once we do the demerger, I think that's going to be hugely shareholder value creation because the market always loves a pure play company which is focused in one business, and all the lifestyle business will get consolidated into one company and the other company will have the real estate business. So I think it's good and a win-win for everybody.
Indian Hotels Company reported a robust set of numbers. The company posted a record profit in FY23 with growth of given. How would FY24 differ from what this or other previous years have been for the Indian Hotel? MD and CEO of IHCL, Puneet Chhatwal, talks about the road ahead. Listen in.
Some of the things are just a consequence of where you stand with your capital structure. So our capital structure has changed. We are a debt-free company and we will remain debt-free, but we are sitting on a big positive cash flow when we opened the account this year, right? And if we keep adding to that free cash flows, it positions us very well for any consolidation opportunities that might come in. Till now, the growth has been mainly organic. So that's the first point. Second is a part of this cash flow we can use to scale up new businesses we started in homestay, home delivery, quick service restaurants. We really did not put any capital behind those businesses. They were based on incremental cash flow. So I think we are now very well positioned to take on certain obligations in terms of, let's say, if we want to build ourselves 20, 30, 50 homestay properties or villas on the assets that we own and we have the FSI available, that is possible, that is doable because we have the means to do it without taking any debt. So I think there is a lot of interesting opportunities around the corner and how to scale up our human brand, which definitely alone in QSR by the end of next year should be around 100 quick service restaurants. And that is significant that in 3 to 4 years time without putting any capital behind it, because we took a decision that every Ginger Hotels all day dining will be called Qmin and will be done that way. So alone that should give us 100 Qmin branded restaurants and presence on the airports, presence in shopping malls for a Qmin. So I think a lot of interesting things are around the corner besides our backbone and our mainstream brand, our pride of the nation and pride of Indian Hotels is and will remain the Taj. So I think we have also made certain strides recently in signing our 250th hotel in Riyadh. We just did a twin Taj and Vivanta in Dhaka. So on an asset light model or operating lease model, we will make certain moves to strengthen the brand internationally also.
From Sunil Shetty's H2O and Sachin Tendulkar's restaurant chain Tendulkar's to Virat Kohli's 1-8 commune and Shilpa Shetty's paparazzi famous Bastion, celebrities have for long favoured investments in restaurants. But the path of entry into food ventures is changing. More from my colleague Rishabh Bhatnagar.
From lavish pubs and trendy discos in the early 2000s, to fine dine and themed restaurants post-2010, and finally now, new concepts such as cloud kitchens, vegan cafes, and plant-based meat brands. Celebs that have jumped on the food bandwagon recently include Bollywood couple Janelia D'Souza and Ritesh Deshmukh with Imagine Meats, a plant-based meat brand, Malaika Arora with her cloud kitchen Nude Bowls, and comedian Zakir Khan with his cloud kitchen Mehfil Biryani. The model seems to have changed from what was the norm a decade ago. Back then, the only path for a celebrity to enter the food industry was by investing a substantial amount of money in renting a high street, high footfall, sit-down restaurant. Now, with the proliferation of food delivery apps, celebrities have started investing more in themes and products that they stand for, with cloud kitchens providing a much more realistic and pocket-friendly entry point. This also lets them test the water for a short while before committing a larger amount of capital. But all of this also depends on the continuation of the ordering in theme.
With that, it's time for us to slip into a short break. Stay with us.